So let me try to fill up all the boxes of December in green because in July month it was not possible, and even in August month it was not possible, and in September month one box was left out, and Parthaji, your setup is good, sir. Was patient and confident on the setup, got 13% in Karur Vaish. That's awesome. Okay. So, and December month is very consistent. So let's hope I can fill all the boxes in green with all your blessings. Okay. So let's get back to candlestick patterns. Thank you, Manishji. Now, please tell me, what do you understand by candlestick pattern? What does that signify? And what is the information that you can derive out of it? Jatinji are just discussing some basic things. So that's okay. Price movement, very good. Then sentiment of the market, very good, Ravinderji. Open, high, low, close, brilliant, Ravi CT. Okay. ಕನ್ನಡದವರೆಲ್ಲ ದಯವಿಟ್ಟು ಮೆಸೇಜ್ ಹಾಕಿ ಸಿಗ್ರಪ್ಪ ಎಲ್ರು ಬೆಂಗಳೂರಲ್ಲಿ ರಿವರ್ಸಲ್ ಪ್ಯಾಟರ್ನ್ಸ್ ವೆರಿ ಗುಡ್ Shijit. Then what else? Stock trend, very good. Okay. ಹಾ ಇಂದುಮತಿ ಅವರೇ ಡೆಫಿನೆಟ್ಲಿ ಎಲ್ರು ಸಿಗೋಣ. ನೀವು ಎಲ್ಲಿ ಇರೋದು ಈಗ? ಎಲ್ಲಿ ತಾವು ಇರೋದು? So breakout and breakdown, very good. So say for example, ನಾಗರಾಜ್ ಅವರ ಅಥವಾ ನಾಗರಾಜ್ ಅವರು ಎಲ್ಲ ಅಂಕಲ್ ಇದ್ರ be a red candle. Decide the color of the candle. Okay. Now, so when I look at the candle, what are the information that I get? So don't you think you'll get to see the open, high, low, close information? What is the length of the candle? Is the color of the candle? Okay. Now, so when I look at the candle, what are the information that I get? So don't you think you'll get to see the open, high, low, close information? Open, high, low, close is very important for all of you to take entry for a buy trade and to keep a stop loss. So open, high, low, close is a very qualitative information. Now, please tell me, what is the length of the candle? Is it the difference between high to low, or is it between open to close? What is the length of the candle? Is it the difference between high to low or open to close? I want everybody to participate because you guys are must participate. Very good. The difference between open to closed. Daniel G, no. See, when I'm talking about the length, I should include the wick as well as body. So it is always a difference between high to low. Okay. So whenever I'm talking about the body of the candle, real body of the candle, then it is the difference between open to close. So these are the basic things that we need to strengthen up to capture a great clarity in the long run. So whenever I'm talking about the length of the candle, which is very, very much important for a breakout and to keep the stop loss, it is always the difference between high to low. The length of the candle includes both body as well as wick, upper wick and lower wick. Okay. But if I'm talking in terms of real body, real appreciation or depreciation, then it is always between open to close. Say for example, if somebody asks you in a particular day, so what is the percentage of appreciation or a depreciation in a stock, then you should take the difference between open to close. Okay. But if somebody is talking about the length of the candle to decide the entry and stop loss, then you have to take the entire length of the candle including body and the wick. So that is the difference between high to low. Is that clear? Now let me take an example to explain the process of the formation of the candle. Let me give you an example or a case study to understand how the wick is formed, how the body is formed. Let us assume it is an extremely bullish day. Let us assume it's a budget day, and government is up for giving you a lot of positive programs so that you'll get benefited out of it. So the day will be extremely bullish. Okay, so now let us boil down to the job of the buyers and sellers. What is the job of the buyer? Just keep buying whenever there is an opportunity. What is the job of a seller? He always looks for an opportunity to sell rather than buy. So buyers always they look for buying, and sellers they always look for selling whenever there is an opportunity. Okay. So let us assume the market is opening at open price. So let me give a value. Let us assume the open price is 100. Okay. The market opens at 100. Now, everybody is having a great clarity based on the news which is running around and based on the pre-market gap up opening that that particular day will be extremely bullish. So out of 100 traders, there are 80 buyers and just 20 sellers. Now, who is more dominant here? On a bullish day, out of 100 traders, there are 80 buyers and 20 sellers. Buyers are more dominant according to the numbers. Okay. Now, but 20 sellers, don't you think they'll stick to their job of selling? Because they know only selling. They will sell until they realize the dominance of buyers. Okay. As soon as the stock opens at open price, let us assume 100, sellers, 20 sellers will start selling at 100 rupees, and they'll make it fall to 80, or they'll create the low. Is that clear? When market opens, the low is created by the sellers because their job is to push the stock price downward. Okay, so whenever they reach to the lowest possible point, it is almost like a support. Who are available at the support zone to buy at the least possible price? Buyers. So when sellers realize there are more number of buyers at the lowest possible point, don't you think they'll book their profits and escape? Because they, as soon as the market opened, they sold due to volatility, they created the low, and sellers are in profits whenever we calculate the difference between open to low. So there are two options for sellers: either to stay back and get their stop loss hit, or just be happy with the profits, book your profits, and then escape because it's a day for bullish sentiment. Now, are you guys getting my point? Now, when sellers escape booking the profits, okay, now buyers will start buying at the lowest possible point, and there is no resistance for them. So they'll push the share price to the highest possible point. As soon as the market opened, sellers started selling the stock, and they created the low. At the lowest point, they got to know there are huge number of buyers. Rather than losing money, let's book profits and escape. Once sellers are not there, then there is no resistance for the buyers. Then obviously they enter at the lowest possible price as a buyer, and they'll push the stock to the highest possible point. Now, what will happen at the highest possible point? So there are traders who have their wives sitting next to them to see the profits. So don't you think half of them will be very fearful and they book their profits? Okay. Jatinji, I'm just taking an example where it's a bullish sentiment. Okay. So half of them are sitting right next to their wives, and their wives are calculating, with this profit I can shop this much. And imagine you losing money in front of your wife, and definitely you're going to get screwed up, right? So half of the buyers, because of the fear of their wives, they book their profits and escape. The remaining half were supposed to be single. Okay, they try to hold the market at the highest point, but without money power they cannot hold it. So they try to bring it to this level, and they'll close the market. So as soon as the market opened, the sellers sold the stock, and they created the low. By looking at the market depth, okay, they got to know 80% strength is on the buyer side. So they book their profit and escape. whenever there is no opportunity for resistance, definitely they'll push the stock because the market is extremely bullish and they create the high. Now the big question is, why did green body did not close at this level? Why did it close at this level? For that, half of them, they are in huge profits. Don't you think? From low to high is huge profit for any trader for that particular day. So obviously they'll be in huge profit, and most of them are very practical. So they book their profit and escape, and remaining half, they are very much uh, expecting market to go up, but then they realize there is a fall of volume. So when there is no volume, obviously they have to come closer, and they close it at the this particular level. So the shadow zone is the maximum point that it ever reached, but it could not be sustained. That's why body did not close at the high nor at the low. That's why there is a shadow region. Is that clear? This is how open, high, low close is formed in any candle that particular day. Okay. So because overall sentiment of the market is the key to decide who is more dominant. Definitely people don't come to market to lose money, right? Everybody wants to make money. So definitely everybody gonna participate in the major trend, right? So since last 1 week, you have been seeing market is extremely bullish. Will you take put option? Do you have the courage to take put option in this extremely bullish market? No. 80% of them will participate towards bullish sentiment because major trend is extremely bullish. So this is one of the case study to explain open, low, high, and close. Are you guys getting my point? Now, so let us assume a bearish sentiment day. When Russia attacked Ukraine at 4 a.m. in the morning, don't you think you had an inner feeling that market will crash today? Because obviously, when Russia attacked Ukraine, definitely the Cold War is getting converted into Third World War, right? So definitely everybody wants to protect their money, which is there in stock market. Obviously, everybody will start exiting. Forget about Russia, Ukraine. Whenever the COVID, the pandemic was announced, which occurred after 100 years, don't you think you want to preserve your money than losing it? Are you guys with me? Yes. So what will be your sentiment as soon as market opens? Definitely out of 100 traders, 80 traders will be sellers, 20 will be buyers who think after gap down there might be a retracement. Let me make my point. Maybe at the 3 o'clock. Will you wait till 3:30 particular close price? It could also understand how did this open high low close is created. Buyers and sellers. Is that clear? Candlestick segregation you are supposed to learn. There are only 8 candlestick patterns. If you master those 8 candlestick patterns according to the prerequisites that I mentioned here, then you will make crazy money, be it swing investment or intraday. Please tell me, what is the difference between the Marubozu? First start off with continuation pattern. So Marubozu is one of the finest example for continuation pattern. So now please tell me, what is the difference between the Marubozu candle and the candles that we discussed just now? What is the difference? Notable difference that you can see here. Very good. Full bodied, no wicks. Yes or no? Full bodied, no wicks. So don't you think when there is no wick, when there is no tug of war, when there is full dominance, don't you think that is pure dominance of seller? Whenever you see red Marubozu, be it in 15 minutes, be it in daily time frame, please expect further fall. Whenever you see a red Marubozu, it is trying to tell you, please stay back in trade so that you can expect more profit, more fall. Okay. So if it's a green Marubozu, then definitely it is trying to tell you, please stay back and buy trade because you're supposed to get more profits because now there is a pure dominance of buyers or sellers. Okay. So let me just try to take few example here. Okay. Let me just try to see if there are any good examples. And I would appreciate if you guys can share a lot of examples in the group, because practice will make you perfect. Okay. So let me try to go to 15 minutes time frame. Yes. So now, do we have a Marubozu here? Do we have a Marubozu here? So whenever there is a green Marubozu without any wicks, what does that indicate? It's a pure dominance of buyers, and we can expect further appreciation. So we can expect further appreciation. So see how beautifully it worked. Whenever you are in a trade, whenever you are in a trade, whenever you see Marubozu, you're supposed to wait for more profit. That is the secret that you're supposed to know. And don't you think even 3 o'clock candle is a Marubozu? So I'm expecting a gap up on Monday. So market will cross 21,500 very easily. So this Marubozu is trying to indicate that market will go further up. Okay. So whenever you see green Marubozu, so what should be your course of action? Please wait for more profits. Now, do we have a red Marubozu without any wicks? Sir, for intraday, if you see any Marubozu in 15 minutes, you can encash its outcome. And in daily time frame, whenever there is a Marubozu, then it will be very helpful for swing investment. Is that clear, Ravi? CT? So, say for example, when you have a red Marubozu here, do we have a significant fall? Do we have a significant fall? This is the secret. So candles will start communicating information to you. It is just an observation. Whenever you see a red Marubozu, please expect more fall. Whenever there is a green Marubozu in 15 minutes in intraday, you can expect more appreciation. So can I expect this as a green Marubozu without any wick? And do we have a significant appreciation here? Do we have a significant appreciation? Yes. So your job from today is to identify a lot of Marubozu and try to get the conviction whenever there is a Marubozu, there will be an appreciation or depreciation accordingly. Is that clear? So can I expect a lot of examples from in 15 minutes and daily time frame? Please post it in the group so that others will also get benefit out of it. So there is a very good appreciation, and whenever there is a red Marubozu, there was a fall. Okay, so in shorter time frames, you'll try to. So there is a very good appreciation, and whenever there is a red Marubozu, there was a fall. Okay, so in shorter time frames, you'll try to see a lot of Marubozus, but your job is to come up with a good Marubozu in daily time frame. Can I expect that work from you guys? You are supposed to do this because this will help you a lot whenever you are in a trade or a swing trade, then it will help you a lot. So can I consider this as a Marubozu? So look at the appreciation. Look at the appreciation after this Marubozu, 4.5%. Just one candle can tell you, it can communicate that it will be a crazy moment. Okay, so let me try to search in a daily time frame. So if you happen to see any Marubozu, I cannot consider this as a Marubozu because there is a wick on either side. I just need clean, flat bottom or top. So let me take Kotak. So let me try to look at it in daily time frame. So don't you think it's very rare to find Marabout in daily time frame? And whenever you get it, please make best use of it. Tanla. So can I expect you guys to identify, because you got to know the functionality of Marabout, right? So it's your job to get me a right Marabout in daily time frame. Is that clear? In daily time frame, it's very rare, and whenever you get it, definitely you'll make a lot of profits in this. So let me take ICICI Bank. So let me try to check. Okay, so in 15 minutes and in hourly time frame, you'll get a lot of examples. Okay. As you have advanced setup, you don't need candlestick pattern, but just for information, I'm trying to teach you the basics. So nothing much. Okay. See, there is one more issue with Marabout. The accuracy is 60%. I'll tell you why. Because that's why there are so many price action traders who won't get good profits, because candlestick accuracy itself is very less. So don't you think it's a perfect textbook? Candlestick itself can here. Luckily, we found one Marabout in daily time frame. So based on this, so there was a 14% appreciation. Great thing to achieve. That's why I say the accuracy of candlestick patterns is just, and yes, and whenever there is a trend line breakout and if there is a Marabout, you can make money consistent. So shall we go ahead? Now, my personal favorite is reversal candlestick pattern. Reversal candlestick pattern. So for the continuation process, it is only Marabout. Let me try to go to the reversal candlestick pattern. And my personal favorite is hammer, bullish hammer. Do you see there are two hammers with different body color? One is green hammer and one is red hammer. This one. So, do you see a long wick at the bottom? The long wick at the bottom, don't you think it indicates the retracement towards bullish sentiment? The long wick at the bottom, it indicates buyers did not allow the candle to close at the lowest point, they pulled it up. This is the victory of the buyers. Whenever you have long wick, maybe 3/4 of the length of the candle, if there is a wick at the bottom, then obviously it's the victory of the buyers. Now the stock is ready to shoot up. And whenever you're trying to look at bullish hammer, please don't look at the color of the candle, be it red candle, be it green candle. You're supposed to look at the length of the wick at the bottom. Is that clear? And I'll give you many more prerequisites to identify the right bullish hammer, because each and every bullish hammer will not give you profits. You're supposed to identify the correct one technically. For that, I'll give you a lot of prerequisites. Please remember, the candle can be green in color or red in color. What matters is the length of the wick at the bottom. Is this point clear? And upper shadow can be very little or no shadow at all. Okay. upper wick can be very small compared to the lower wick. That is also acceptable. Okay, and if there is no wick, then that's the best case scenario or textbook example. Now, let me come back to the prerequisites. So I'll give you the notes for this, but as of now, please focus on learning. The first prerequisite, there must be a preceding bearish trend. Do you see a fall before the formation of a inverted hammer, so bullish hammer? Do you see a fall before the formation of the bullish hammer mentioned here? Yes. So the first prerequisite, you are supposed to identify a bullish hammer after a fall. Please remember this. First prerequisite, preceding downtrend. Preceding what? Bullish hammer. So preceding downtrend is the first prerequisite. Second prerequisite, the hammer should look like an actual hammer with a long wick at the bottom. Is that clear? First prerequisite is preceding downtrend. Second is the shape. The shape of the candle should look like hammer. Okay. Third prerequisite, this particular hammer should be at the bottom of the downtrend. The hammer which you're trying to trade, that should be at the bottom of the downtrend. Now the next question in your mind is, how can we identify the bottom? See, do you have any candle breaching the low of the hammer? Do you have any candle breaching the low of this? Don't you think if there is no candle breaching the low of the hammer, then obviously the low of the hammer itself is the lowest point of the bearish trend? Are you guys getting my point? If the low is breached, then obviously this is not the bottom of the downtrend. Okay. So now please remember there are three prerequisites. Preceding downtrend, okay. Then shape should look like hammer, okay. And the location of the hammer should be at the bottom. If you have all these three prerequisites, then 80% of the time you'll make money. Next point, mark high and low. Now you're supposed to take the length of the candle, mark high and low of the candle. Whenever high is breached, whenever high of the bullish hammer is breached after matching all the three prerequisites, you can go for a buy trade, keeping low of the hammer as stop loss. Is this point clear? We are trying to maintain risk reward ratio. We are trying to maintain the risk reward ratio. Whenever high of the hammer is breached, it's a confirmation that trend gonna reverse. Then once you take a trade, you need a stop loss. The hammer low is your stop loss. Is that clear, Manish Jadavji? Okay. So shall we explore a lot of example? So let me take Nifty 50. So can I consider this as a hammer in terms of shape? I've mentioned the color of the candle can be either green or red. Do we have a preceding downtrend? First prerequisite. First prerequisite, do we have preceding downtrend? Yes. Do we have the shape of the candle looking like hammer where length of the wick should be 3/4 of the length of the candle approximately? It can be even 50%. Okay. And can we consider this hammer as the bottommost point of the bearish trend because there is no candle breaching the low of this hammer? So this has to be the lowest point of the bearish trend. So do we have all the three conditions matching? Preceding downtrend, shape is looking like hammer, and this hammer should be located at the bottom of the downtrend. How do we know bottom? Because there is no candle breaching the low of the hammer. Hence, this itself is the bottom. Okay. Now, let me mark high and low of it. Okay. So what is the difference between high and low? 93 points approximately. So no. So next day there was a gap up. Approximately when there is a gap up, definitely it has breached the high. Even if you take a positional trade to maintain 1:1 risk reward ratio for 93 points, did we get 93 points here? There was a movement of 324 points. Right? Is that clear? So can I consider this as a hammer according to my definition? Preceding downtrend, location of the hammer is at the bottom because there is no candle breaching the low. And do we have the shape looking like hammer? Yes, all three conditions matched. The next candle breached the high. I'll take a trade keeping the low of the hammer as stop loss, but there is no candle which is touching the stop loss. Your stop loss is not hit. So what is the risk? Risk is around 213 points. Can I risk 213 points to capture 2,920 points using just candlestick pattern? So you cannot trade every bullish hammer. Okay. So you are supposed to match all the prerequisites. Is that clear? Are you guys enjoying the process? Because this is how you're supposed to look at candlestick pattern. Now, this is also bullish hammer according to the shape. But do we have a preceding downtrend for this? The first prerequisite itself is not matching. So we are not taking that. So this is also a hammer, but do we have a preceding downtrend? No, it's a part of bullish trend. Hence, we're not going to trade this. Okay. So let me just check other example. So can I consider this as a hammer? Preceding downtrend, location of the hammer is at the bottom and the shape is looking like hammer. Mark high and low of the hammer. Once high is breached, go for a trade. So what was my risk? Simple analysis, but great returns. 200 points risk. So the return is 2,560 points. Simple logic with lot of prerequisites, identifying the right candle and making a good move. Yes or no? Are you guys with me? So let me take Nifty back. So I can consider this as my reference candle. After the formation of this candle, there is no candle which is breaching the stop loss. Don't look at the past candles. Once you take hammer, you're supposed to look at the future candles, whether it's hitting your stop loss or not. So preceding downtrend, location of the candle is at the bottom. And what was the risk? The risk was around 500 points. The reward is around 4,200 points. A simple logic, but it's giving you great returns. Is that clear? So can I consider this as a hammer? Preceding downtrend. After the formation of the bullish hammer, there is no other candle which is hitting the stop loss. That is the beauty of this strategy whenever you just match the multiple prerequisites. So whenever you take a trade, 650 points risk. Reward is 8,600 points. Can I risk 650 points to capture 8,600 points? So are you guys liking it? And you can use this in shorter time frame also. Let me go to 15 minutes time. Okay. So can I consider this as a bullish hammer? Preceding downtrend, the location is at the bottom. The shape is also looking like hammer. So what was my risk? The risk was around 130 points. In intraday trading, don't you think it's wonderful to get 592 points? Just because of bullish hammer, which I've taught you with multiple prerequisites. Intraday, crazy return. Crazy. Yes, Ravindraji, you're right. So there is a preceding downtrend. There's a hammer here after breaching the high of the hammer, after matching all the prerequisite. You've got very good returns. The risk is 58 points, reward is 306 points. So look at this beautiful hammer, which is matching all the prerequisites. So look at this preceding downtrend, and the location of the candle is at the bottom. Once high is breached, is my stop loss hit. The beauty of my setup is that whenever you match all the prerequisites, the probability of hitting the stop loss is very less. So for 53 points risk, you've got 227 points reward. Look at this hammer. So preceding downtrend, once high is breached, we'll go for a buy trade. So the reward is around 428 points. The risk is 82 points. Have you ever identified bullish hammer this way earlier? Because you cannot trade each and every bullish hammer. It's very risky. It will hit your stop loss. But if you match multiple, don't look at PDH and PDL. Just match prerequisites, mark high and low, just take a trade. If you're looking at bullish hammer, then definitely you might get an opportunity. So when can you apply this logic? Whenever candles are between PDH and PDL, then there is no trading at all. So whenever if you have a bullish hammer at PDL, don't you think you can appreciate, you can get at least some profit on a choppy day? Yes or no? Is that clear? Because you'll be trading based on 1:1 risk reward ratio, yes or no? So look at this. So a clean fall. After that, there's a beautiful bullish hammer at the bottom. Once high is breached, 473 point risk for 90 points. So look at this. You could have predicted the gap up with this strategy. See how beautifully. So you could have taken positional trade based on this logic as well. The risk is around 91 points, reward is 592 points. So don't you think this method of looking at candlestick pattern will help you along with the setup, be it swing or intraday? So to ingrain this information in your subconscious mind, you're supposed to do a lot of practice. You're supposed to come up with a lot of examples. So can I expect a lot of examples from you in daily time frame as well as 15 minutes? Can I expect examples regarding Marubozu and bullish hammer? Because it's for your own good. Okay. See, I'm not in a hurry to complete everything in a go. Okay. So I've discussed two candlestick pattern, and I would appreciate a lot of homework regarding this. There are many people who are not yet part of this session. So the remaining candlestick pattern will be dealt in maybe on next session, that is on Saturday. So once we complete candlestick pattern, once we complete all the 8 so many people. Okay, stick pattern. With this bullish hammer, you can make a lot of money whenever there is a beautiful reversal. Okay, because I'm not in a hurry to rush it up. Okay, thank you, money available. Then based on that,